budget amendments. Today, to address this session, we have a very popular face and well-known faculty member from our institute, that is Ms. CA Annapurna Kabra. Madam, welcome to you to the session. Thank you so much for consenting to be here. Yeah, a brief introduction about Madam is as below. Annapurna Kabra is a fellow member of the Institute of Chartered Accountants of India. She has completed her DISA and DRM course as conducted by ICAI. She has contributed the articles on VAT and GST and is a regular contributor to the journals, newsletters of Bangalore branch of SIRC as well as Karnataka State Chartered Accountants Association, and also at the SIRC journal and IDTC committee of ICAI. She has co-authored a book on the guide on VAT audit and also co-authored a book on the book for the Institute of Chartered Accountants on the VAT audit. She has co-authored the background material of indirect tax material, which is given at the prescribed by the Institute of Chartered Accountants. She has authored the technical guide for KVAT for ICAI. She has assisted drafting the background material for on GST for ICAI and also helped in the transitional material which was released by the ICAI. A number of seminars and conferences to her credit. She has addressed more than 400 seminars across the country and gatherings of chartered accountants, tax practitioners. She is a regular faculty at Fiscal Policy Institute. She also is a regular faculty for and advising the Karnataka commercial VAT officers in the state of Karnataka. Apart from that, she is a practicing chartered accountant and a partner in a firm called HSKA and Associates. Madam, it's a pleasure to have you and thank you so much for being there. Over to you.
Thank you so much. Good evening to all the members. First of all, I thank Bangalore branch of ICAI and CA Institute for giving me an opportunity to speak on a topic of recent amendments in GST law, including budget amendments. I think budget amendment is not a new for us because every amendment is it's a part of a budget amendment, I can say today, because it's not like once in a year or once in a quarter we are getting amendments. It's more or less as a very frequent amendments we are able to see in the GST law. So with this, I'll be just trying to highlight the major amendments. There are flood of amendments which has taken place, especially after 47th GST Council meeting and 48th GST Council meeting. But I'll be just highlighting on the macro amendments in the GST law, either from the perspective of circulars, certain important notifications, and budget amendments. So let us try to analyze the budget amendment first, and then we'll try to discuss on other major amendments under the GST law. So basically, I think it's just 10 days before, just 2 weeks before, we all have heard our finance minister speaking on the budget, especially not much on indirect taxes, but because it has come through come through finance bill, and basically we have tried to understand what are the major amendments which has taken place in the law in the finance bill 2023, and there are certain amendments. There is a reason behind that. There is certain implications, and whether it has any impact, retrospective or prospective. So I think we have to analyze each amendment and try to see what is the impact of that amendment under the GST law. So the first major amendment I was just trying to look into is input tax credit on CSR expenses. I think this issue we had in service tax law also, and this issue is continued in GST law. So from 1/7/2017 till date, I think that this issue is having a different school of thoughts. The one school of thought says that it is a input tax credit, which is eligible because it is not blocked under Section 70, and it is used in the course of furtherance of business. So based on that, input tax credit is eligible. The second important aspect is CSR is a mandatory requirement under the statutory law, and it is a statutory obligation under the statutory law, which has to be complied by the respective entities. Now the issue is, on one hand, the government has created a statutory obligation on the entity to expend a certain expenses for corporate social responsibility purpose, that is CSR purpose. On the other hand, if you see that the Finance Bill 2023 is trying to restrict the input tax credit, which is pertaining to the CSR expenses. So it is I think it is a principle of inequality, or it is a principle, it is not in the interest of justice, or sometimes we may not call it as very irrational, but simultaneously the benefit of input tax credit would have been given against this CSR expenses because it is used in the course of furtherance of business. That is what my understanding. But today, if you look into the finance bill, they have clearly brought this under 17 subsection 5 of the GST Act. That is nothing but law credit. And especially they made an entry for that saying that input tax credit, which is expenditure expended for CSR purposes, is going to get restricted and it becomes ineligible expenses. And CSR expenses as specified under 135 of the Companies Act. Now, for example, if the CSR is mandated, say 5% of your net profit, and if you have expended, say 10%, whether the input tax credit is going to get restricted only to the extent of 5%, or it is going to get restricted to the extent of 10%. That is the thought process when you're going to look into this CSR expenses. But according to my view, the whole input tax credit will be restricted to the extent of CSR expenses once this is section is notified. Now, the second most important amendment which has taken place is, if you look the intention behind this, I think we all are aware that we have something called as third schedule, which is pertaining to as a neither supply of goods or supply of services. So basically it is a non-taxable supply. So the one of the entry in third schedule, that is entry 8, which 8 subclause A deals with inbound sales. So basically it has been clarified in 2018. Basically they has made an amendment in 2018 stating that inbound sales are forming part of a third schedule, and accordingly they are treated as a part of third schedule. Now the issue is, when there is a supply of warehouse goods before the clearance of inbound, before the clearance for home consumption, that is the inbound sales, then whatever the input tax credit pertaining to those expenses, like for example, port charges, terminal charges, or demurrage charges, or loading charges, or renting charges, there will be certain input tax credit which would have been incurred by the SSC, or there will be certain other expenses also. So the issue is whether those expenses are eligible, or whether such expenses will be restricted under for calculating your reversal of input tax credit. So this issue was not very clear. So accordingly, they brought an amendment in the explanation of section 17, subsection 3. If you read section 17, subsection 3, they have not included this entry. But if you read the explanation below to the 17, subsection 3, they have added this entry along with the sale of building and sale of land. They also added this supply of warehouse goods before clearance for home consumption. So basically, they have added this inbound sales to restrict your input tax credit and to compute your input tax credit under Rule 42 and Rule 43 of the CGST rules. Basically, they have brought this entry under this exempt supply for the calculation of reversal of input tax credit under Rule 42 and Rule 43. Rule 42 pertains to determination of manner of computing your input tax credit and for input and input services, and 43 pertains to manner of determination of input tax credit for capital goods. So basically, this is more or less like they had made an amendment in the section itself, and accordingly, once it is notified, accordingly the computation has to be made. Now, the issue is why they have brought only 8(1). Why they did not bring the other entry? We have other entry called as merchant trade. We also have other mercantile trade. We also have high sea sale. But here the government has identified that are the expenses where the entity is enjoying the expenses, whereas there is a it's forming part of your third schedule. So accordingly, they brought this entry under the explanation to section 17, subsection 3, which pertains to the apportionment of input tax credit between the taxable supply and exempted supply. So this is one of the reasons which I was able to read when I was reading this finance bill, and accordingly they brought an amendment in the GST law. Now next is the most important, one of the important is composition taxpayer. As we are aware that basically composition taxpayer are dealt in section 10 of the CGST Act, and basically composition taxpayer are, there are two limbs for the composition taxpayer. In one limb, there are three persons which are covered, basically manufacturers, service, that is caterer, and the third is the traders or any person other than manufacturer or caterer. That is a one limb of composition taxpayer. There is also another kind of composition taxpayer where the turnover should not exceed 50 lakhs and the rate of tax is 6%. So basically in the two type of this composition scheme, which is there in section 10.2 and section 10.2a, the two types of composition, in both the type of composition, there was a condition, there was a restriction saying that if you have to opt for a composition scheme, then you cannot make supply of goods through e-commerce operator. The person who wants to apply for composition scheme was not eligible to apply for scheme if he is making the supply of goods through e-commerce operator. So this condition is there in both the scheme of composition. Now, after this amendment, after this proposal in the Finance Bill 2023, wherein they are proposing to allow the composition taxpayer to make only intrastate supply of goods through e-commerce operator. So basically, it's not interstate, it is a intrastate supply of goods. It is only for goods and not for services. So they are removing that condition and they are removing that criteria. And accordingly, once it is proposed that the composition taxpayer should be permitted to make intrastate supply of goods through e-commerce operator, whether under 10.2 or whether under 10.2a of the CGST Act. So this is what they have brought under the GST law. And now the next amendment is basically ITC reversal for non-payment of consideration within 180 days to the supplier. First, I would like to bring to the attention of the member that in October 2022, they brought an amendment saying that if you have not made a full payment to your vendor, then you are not liable to enjoy the credit fully. So that was the amendment which they brought in October 2022. And accordingly, there was a havoc around the industry saying that how it is possible that if we have not paid a part payment to our vendor, how can we restrict the full input tax credit? So this issue was around in October and November 2022. And accordingly, there was an issue how to compute, how to avail the input tax credit in case of proportionate payment to the vendor. For example, my vendor has issued me an invoice of 1 lakh. Along with that, 18% he has charged me the GST. So I'm liable to pay him 1,18,000. Say, let us presume I paid him only 60,000. The government stated in October 2022 that if you are making a part payment to your vendor, you cannot enjoy the full input tax credit of 18,000. Then after that, in December 2022, again, they brought an amendment in Rule 37 of the CGST rules. Basically, based on that amendment, they have stated that even though the part payment is made to the vendor, the proportionate input tax credit should be allowed to the recipient. So this is one amendment I just would like to bring to the attention of the members. So that if you are making a part payment, say you have made only 60,000 payment, you are eligible to enjoy the input tax credit proportionate to the 60,000. So approximately 12,000, you can enjoy the credit. So proportionately, the permission is given from and that will be retrospective from October 2022. So we have to presume that even though if you are making a part payment, you are eligible to enjoy the credit of partly. This is one thing. And in the finance bill, they have tried to amend certain terminologies which are used in the proviso of section 16. There is a proviso which has been added in 16.2, where it states that whenever there is a the payment is not made within 180 days from the date of invoice, then the input tax credit should be treated as an output tax liability, and it has to be paid along with the interest. Now they have removed the scope of that, not an output liability. So they have removed the terminology of not an output tax liability, because there is a reason for that. The non-payment of amount to the vendor should not result into a output tax liability. So they have removed that. They have proposed to substitute this, and they have stated only the reversal of input tax credit and not a output tax liability. Because of this amendment, what can be the impact of interest? What can be the impact of interest? The impact of interest is that if you have availed the input tax credit, say for example, you have availed the input tax credit and you have not made a payment within 180 days, still you will not be liable for interest if you have not utilized such input tax credit under 50 subsection 3 of the GST Act. So basically we have to understand that because of this amendment, you will definitely will be liable for interest only when you have availed and utilized that input tax credit. Otherwise, there will be no interest tax liability of 18%. And the terminology of output tax liability has been proposed to be removed from the proviso of section 16(2). So it will be just a input tax credit reversal. It will not be an output tax liability. So this is what proposed in 16 subsection 2, subsection 2, proviso 2, 16 subsection 2. So these are the certain proposals which are made in finance bill. And now the next section is section 23. What is section 23? Section 22 and section 24. Section 22 is defining the person liable for registration. Section 23 is defining the persons not liable for registration. And section 24 is pertaining to the compulsory registration. Now let us see what is the impact of this amendment which has been made in GST Act. I'll just try to open this finance bill so that it is very clear when you are reading that actually. So if you look into section 23, they have stated that notwithstanding anything to the contrary contained in 22 subsection 1 and 24. So it means it is independent of 22 and 24. They have stated that the person shall not be liable for registration if they are dealing in exempted goods, or if they are not liable for taxes, or the exemption is anyway given to an agriculturist, and any other exemption. Now here the question is, this was not there earlier. This notwithstanding anything to the contrary was not there under 23 earlier. They directly restricted the person not liable for registration, all that they have specified. Now what is the impact of this, and is it a welcome amendment? Let us try to understand. See, for example, 24 is dealing with the compulsory registration. So it also includes, like for example, if you are liable for reverse charge tax, you are liable to take a compulsory registration. And section 22 deals with the liable for registration. That is, if your turnover is, aggregate turnover is exceeding, say 20 lakhs, you are liable for registration. Now, when you are saying, I will just give an example. For example, I am an entity who is dealing in exempted goods. And being a dealer of an exempted goods, and if I say take the services of lawyer, if I take the services of lawyer, you are fitting into 24 because you are liable to take registrations if you are liable to pay taxes under reverse charge. So even though you are a dealer of exempted goods, you will end up taking a registration under 24. So because of that, they have brought an amendment saying that it is, even though if you are dealing in exempted goods, you are not liable to take registration, even though it is a requirement under 24 to pay taxes under reverse charge. This is one understanding of bringing this proposal. Now the second impact is, for example, a person is having a taxable supply, say 20 lakhs, he is having an exempted supply, say 20 lakhs. So around 40 lakhs, he is providing the services. So out of that services, should you look as an aggregate turnover or we should look as a taxable turnover? We are very clear that whenever we are going to look for a registration, we are going to look as an aggregate turnover. So basically, if he is dealer of a taxable supply and if his aggregate turnover is exceeding the specified limit, he is liable to take a registration. So basically, the government wants to bring an amendment saying that if you are a pure dealer of exempted goods or services, you need not take registrations because there is some criteria which has been specified in section 22 or section 24 of the GST Act. So basically, we have to understand that section 23 is on hierarchy. See, if you see the hierarchy of 22, 23, and 24, 22 is on the lower hierarchy. After that, 24 will come. And after that, 23 is on higher hierarchy of this registration. So 23 is independent of section 22 and section 24. And basically, this is a most welcome amendment because of this, there was a confusion whether there is a requirement to take registration, even though if you are dealer of exempted goods. So I think this is a most welcome amendment, and this will be retrospectively from 1/7/2017. So I think that this is what they have made an amendment in section 23. They are proposing this amendment, and it is definitely going to clear a lot of litigations and different opinions which we had on this 22, 23, and 24, and it will bring more clarity from the point of view of registration. There are certain thought process which is going on that if you are whether you are liable to pay reverse charge, whether 9(3) will override 23, because 9(3) is dealing with the charging section, and if you are liable to pay reverse charge, whether 23 will override 9(3) or 9(3) will override 23. All this different analyzing is made for this section. But basically, from the registration perspective, they have made it very clear. You are not liable to take registration independent if you are a dealer in exempted goods or services. So I think that this is what we can bring from this proposal. The next is amendment which they have brought is return cannot be filed after 3 years of the due date specified for such returns like GSTR 1, GSTR 3B, CMP 8, TCS, GSTR 9, GSTR 9C. So basically, they want to bring the judicial discipline in the GST law, and they want to specify a time limit to file all these returns. Beyond that, you cannot file these returns. So this is applicable for this kind of return other than TDS and IST. This can be one of the reasons to bring the judicial discipline. You just cannot give limitless time to file all this 9C or any other returns. This can be one of the reasons. And second reason is might be because 73 specifies that there is a time limit for the adjudication. So it is 3 years from the due date of filing the annual returns. So basically, I think considering the adjudication under 73, basically where the time limit is 3 years from the due date of annual return. So considering that 3 years, they want to give that benefit only to those. And if you are dealing in 74, like misrepresentation or suppression, I think there will be there is an explanation which is given in 74 explanation where they have stated that they have defined the suppression in that explanation, and they have very clearly stated that if you are not filed the returns within the due date, then it may lead to a suppression. So basically, the government is trying to bring it within a specific time limit. If you have not complied with the law, you have not filed the returns, you have not updated the informations, then you will automatically lead into a suppression of information, and accordingly they can do the adjudication under 74. So reading this 73 and 74 and this forms which has been specified, the time limit which is specified, I think this is what we are able to analyze by reading this proposal. We have to wait and see why specifically they brought 3 years from the due date of specified returns. And the next important amendment proposal which has been made in finance bill is the interest on delayed refund would be in prescribed manner in various scenarios. Earlier, it was 60 days in all scenarios. So basically, if you read section 56, I think I'll just try to read for the benefit of members, so that it is one of the most important amendment I find to read for the benefit of members. See here, basically they have tried to say that earlier it was from the date immediately after the expiry of 60 days from the date of receipt of application. So if an applicant has filed a refund application, and if the refund is either not sanctioned or not rejected within the specified time, then there will be a interest component on the refund which will be sanctioned by the assessing authority. So what they have stated that they will be liable for interest at 6% if they have not sanctioned that, if they have not completed the refund proceedings within 60 days. So now, in various scenarios, because of verifications and because of lot of other analyzing and other verifications, the time limit of 60 days is not sufficing for the department. So basically, because of that, they brought an amendment saying that for the period of delay beyond 60 days from the date of receipt of such application till the date of refund of such taxes to be computed in a manner and subject to such condition and restriction as may be prescribed. So earlier there was no such condition, no prescription. So for all kind of refund application, the time limit was 60 days from the date of refund application. If the refund was not sanctioned within 60 days, then there was a levy of interest on such refund. But now they have brought it very conservatively, and they have stated that it will be computed in such a manner subject to the condition and restriction as may be prescribed. So we have to see what conditions, in what scenarios there will be a time limit of 60 days, in what scenarios there will not be a time limit of 60 days to pay the interest of 6% or 9%, as the case may be under 56 of the CGST Act. Right. So I think these are the amendments. Now let us go to the next amendment. I was already talking that in Schedule 3, we had a paragraph 7 and 8, an explanation to which is applicable from July 2017. So in case, because it is forming a part of exam supply, but the problem is this amendment has happened in 2018. So there are a lot of notices which are issued by the department saying that for 17, this amendment was brought in 18. So there will be levy of taxes for the period 17-18. And accordingly, some of the entities have already paid the taxes on this high C sale or in-bond sale. And some of the entities are litigating on this issue. So basically, they have made a clarifications, or more or less like a proposal saying that this is retrospectively from 1 July 2017. It will be treated as it has to be read as from 1/7/2017 and not 2018. Definitely, it will resolve a lot of litigation issue. And in case if you have already paid the taxes for 17-18, treating it as a taxable supply, then no refund shall be made of all the taxes which has been collected. So this is what the government is very clear, that in case if you have already made a payment, then there will be no refund which will be given for the year 17-18 and as the case will be. So that is what a proposal which is made in the Finance Bill 2023. The next is non-furnishing of unregistered dealer or composition dealer information in TCS returns. So basically, if you look at the proposal of this e-commerce operator, I just like to bring to the reading of this. So basically, if you read here, I think I'll just try to explain it here only. See, now the government is trying to bring the details that if you are, if as an e-commerce operator, if you are dealing with the unregistered dealer who was liable to get registered, or if you are dealing with a composition dealer who is not liable to make interstate supply, but still he is doing the interstate supply, then the liability will be shifted to an e-commerce operator. So indirectly, the government is shifting its burden of verification and assessment to the e-commerce operator. Many organized e-commerce operators generally do the data analyzing and the information verifications before getting connected with the register and the dealers. But in case of other e-commerce operator, if they have not analyzed the data of this unregistered dealer or composition dealer who is not complying with the law, then the liability will be shifted to an e-commerce operator. So I think we have to be very careful, and it has to be suggested to the e-commerce operator at whatever kind of e-commerce operator, but they have to be very clear on the information of unregistered dealer and composition dealer, and they have to update all those informations in TCS returns, which is to be filed by e-commerce operator under section 52 of the GST Act. So I think this is one of the amendment proposals. So indirectly, we can understand that government is trying to say that e-commerce operator should do a compliance rating or should do the analyzing of tax position of an dealer with whom he is dealing for e-commerce operation. So if he is not complying of details of unregistered dealer or composition dealer, he will be liable to be penalty of 10,000 or amount of tax involved to the equivalent of tax as if he is a dealer of a registered person. So ultimately the liability is shifted to a e-commerce operator, and they are planning to bring an amendment in 122 2A of the GST Act. 122 is dealing with the offenses. So they are planning to incorporate this entry in 122 2A. I just read for the benefit of the members that how they are planning to bring. See, for example, in 122 1A, they are trying to bring 1B, any e-commerce operator who is allowing to supply of goods or services or both through it by an unregistered person other than a person exempted from registration by way of notification issued under. So if he is allowing to supply the goods to an unregistered dealer person who is not a person, who is a person other than a exempted from registration, he was liable to be registered but not registered, or if he is allowing an interstate supply of goods or services or both through a person who is not eligible to make interstate supply. So basically, who is not eligible to make, it is ultimately the composition dealer who is not eligible to make a interstate supply. So, or fails to furnish the correct details in the statement under 52(4), that is TCS return, then he shall be liable to a penalty of 10,000 or amount equivalent to tax had been made by a registered person other than a person paying tax under 10, whichever is higher. So basically, they are trying to quantify the taxes and they are trying to quantify the penalties under making it as a shifting that liability of penalty to a e-commerce operator wherever he has not complied with the data analytics or the data verification of unregistered dealer or composition dealer, as the case may be. And he has to be very specific in updating the information in TCS returns, otherwise he will end up paying a huge penalty under 122 1B of the GST Act. So I think this is one of the proposals which has been made in the finance bill. We'll see how it is going to get notified. Now, the next most important is they are trying to bring out something called as in 132, we have a non-punishable and non-punishable offense. So basically, they are trying to bring out offenses which are defined under 132. So they are carving out certain offenses and saying that they are the non-punishable offenses because they need not pay that quantification of penalty and they need not go for an imprisonment. So basically, they are carving out certain offenses which has been defined in 132 of the GST Act. What is G, J, and K? Basically, we have to understand. G is talking on the not allowing the proper officer to look into the informations. And J is tampering the evidence or destroying the evidence, whichever is there during the verification. And K is dealing to not supplying the information or giving the false informations. No doubt there is an offense which has been made, but they are not covered under 132 of the GST Act. So this is most important amendment. They have made it in GST Act. And they have also brought amendment in 132 saying that because in 132, we have a slab of depending upon your penalty, depending upon your quantum of tax, depending upon your quantum of evasions, depending upon your offense, the penalty is defined. So if you are taxed or if there is a fraud of 1 crore, or if you have made a fraud invoices, then you are fitting into a 132 1B. So there's one offense which is relating to an issuance of invoice without supply of goods or services, or you have wrongly availed the input tax credit. So in that cases, your offenses, if it is exceeding 1 crore, you are fitting into 132. Earlier, this was not there. Now they have specifically brought under 132 1B of the GST Act. Earlier, the limit was not 1 crore, but now they have brought that limit under 132. Earlier, it was under 132. Earlier, it was about 2 crore. Now they have made it 1 crore as a limit beyond which they will be liable for. They'll be treated as a punishable offense. And other offenses listed in 132(1) will enjoy the threshold punishment of 2 crore and above. So any other offense other than the offense of fraud invoices, they will be, the offense limit is specified as 2 crore and above the case. So depending upon the quantum, your imprisonment, all that is defined in clause 1, 2, 3, 4 of your 132 of the GST Act. So basically, they have removed this three, the most important, but I don't know why they removed tampering an evidence or destroying the evidence, because that is also one of the kind of offense. But as on date, they have removed all these offenses from the 132 of the GST Act for the purpose of quantification of penalties. Now the next important aspect is compounding of offense now made applicable. So now the problem is, on one, we have dealt with what are the offenses which has been defined in 132. Now there is a provision of, in under 138, we have a provision of compounding an offense. So there is an option given to a person to compound his offense. But compound is was made, it was not, now they have made it applicable that if you are a person who is under G, if you have done an offense which is covering under G, J, K, which you have dealt here, G, J, K, the same entry has been defined in 138, saying that if you are, say, given a false informations, or if you have tampered the evidence, or if you have destroyed the evidence, or if you have not allowed the officer to gather the information, all that kind of offenses, still the benefit of compounding of offenses made applicable to them. So I think that this is one of the most welcome amendment which has been proposal, which has been introduced in 138, which was not there earlier. Now at least they can go with the option of compounding of offense. And other than that, there is no compounding of offense under 132. So other than that, if you have a repetitive offense which you have made under 132.1, you cannot enjoy the benefit of compounding an offense. So if it is a repetitive offense, you cannot enjoy the benefit of compounding of offense. That is, the compounding of offense is not applicable to such offenses, and accordingly, they are not covered under 138 of the GST Act. Major amendments are made in 138, and basically, I'll just try to get into this just 2 minutes, what I was just trying to make you understand. So what they have made is, in 138, they have tried to bring out all the entries like A to F. They removed G, they removed K, and they've added L. So basically, all the offenses which is defined in 132, A to F, H, I, L, everything they brought under 1A, and B is removed, because earlier some entries other than A to F were covered under clause B, that is has been removed. So all entries, all offenses, whichever is there, are brought under the one entry. And they also introduced one more clause C, that is a person who has been accused of committing an offense under 1B of 132. What is 132.1B? 132.1B is nothing but a person who has made an offense relating to a fraud invoices, issuance of invoices without supply of goods or services. So basically, if you have done a bill trading or wrongly issued a fraud invoices, so in that case, they have the government has stated that it will not enjoy the benefit of compounding of offense. So basically, they have just substituted this very interestingly. Earlier, this C was, if you have made an offense under other law, you cannot enjoy the compounding of under the existing law. For example, if you have not complied under FEMA, or you have not complied under IGST Act, or you have done an offense in other act. So if you have done an offense under the other act, then also there was a restriction that you cannot enjoy the compounding of offense under the GST law. But now they are proposing to remove that entry, and very clearly they brought only if you are doing a bill trading, then only the compounding of offense is restricted. Otherwise, if there is a offense under the other law, the benefit of compounding should be given to the taxable person. So I think this is definitely is a welcome amendment, and they have removed this clause, which is not much relevant. So basically, they have made it quite simple and very clear, and only for what are the offenses where compounding of offense is not applicable. Others, majorly where it was restricted earlier, now they have brought it under the compounding of offenses. So this is what they have specified. And one more welcome amendment is quantum of compounding. How much amount you have to pay if you are opting for a compounding of an offense. So earlier the slab was 10,000 or 50% of the tax involved, whichever is higher, and maximum amount was 30,000 or 150% of the tax, whichever is higher. So the quantum of penalty, the quantum of compounding of offense amount was quite huge. But now they are proposing to reduce 25% of the tax involved, and maximum amount is not more than 100% of the tax involved. So I think this will definitely reduce the quantum, and it will encourage to the taxable person wherever they are eligible to make to get covered under 138 of the GST Act. So I think this is what they have made an amendment in 132 and 138 of the GST Act. So GJK is very important for reading 132 and 138. Now, the next proposal which they are, so basically I've tried to touch upon certain amendment. And there is one more amendment the government is trying to bring out by introducing a new section, that is 158A. So with the consent of supplier, that is, or recipient, the government is given the permission to share the information with the respective entities. So basically they are trying to introduce a new section called as 158A of the GST Act, where they can give the permission of a supplier, like his registration details, his returns details, his GST 9 details, his e-way bill details. So I think all the details which are uploaded in the portal, they can share those informations with the permission of the consul. I think this is what they're trying to bring out in 158A. And even with the consent of recipient also, they can try to give certain information like GST 2A, e-way bill details. So all those details they would like to highlight. They can share it, only they can share it with the permission of the supplier or the recipient, as the case may be. But very clearly they are coming out with the exception clause saying that even though they are going to share this information with the concerned authority, but they will be not liable for any actions which has been taken by any respective authority, and there will be no impact on the liability to pay tax on the relevant supply. So basically they have also brought this disclaimer clause in section 158A of the GST. We have to wait and see how they are going to bring out under in a manner and subject to conditions. So we have to wait and see how they are going to come out on 158A of the GST Act. So this is nothing but consent-based sharing of information furnished by the taxable person. So if a taxable person has already uploaded his information and they want to share this information with other authorities or other persons, so they can just share this information only with the consent of supplier or the recipient, as the case may be. And the next very important is they have brought a definition of, they have drastically amended the definition of non-taxable online recipient. If you read the clause 16 of the IGST Act, they have defined what do you mean by non-taxable online recipient. Now, what basically it's a person who is a recipient, who is a supplier who is located outside India, and he is going to supply the services to an unregistered person. So in that case, as he is supplying the services to unregistered person, there is no reverse charge, and accordingly the liability of paying the taxes is shifted to under forward charge, that is to the supplier who is located outside India. Now the issue is, basically if we read the definition earlier, which has been defined under section 16 of IGST Act, they have basically stated that who are the person to whom the services can be provided. It can be provided to a government, or it can be provided to a local authority, or it can be provided to a government entity, or it can be provided to an unregistered person. Whatever the services which are provided by a person who is located outside the taxable territory to an unregistered person in India, in that case, there is no levy of taxes under reverse charge. And this has already been very clear in the notification 10/2017. It is very clear wherever the services are received by a non-taxable online recipient. In that case, there is no question of reverse charge. Why? Because it has been provided to an unregistered person and to a government authority or as the government entity, as the case may be. Now, they have just made an amendment, and very important is in that definition of non-taxable online recipient, there are two components they have added. They have stated that this forward charge will be there to a supplier only when it is other than the business, commerce, industry, or as the case may be. But now they have removed all that business, commerce, or trade. There is no such conditions. whenever any services are provided by non-taxable online, for example, Google, if they are providing the services to an unregistered person in India, the Google will be liable to pay the GST and not the person, the unregistered person who is located in India. So basically, this is one of the amendment they have made it. This unregistered person was there earlier, even now it is there, but basically it is the Google is liable to pay under forward charge. But what is the important amendment they have made in section 16 is they have removed the condition of other than business, commerce or trade. So if it is only for other than business, commerce or trade, the supplier was paying the taxes under forward charge. But now after this proposal, they have already removed this business, commerce or trade. So because of this, the scope is widened and there will be a levy of taxes on the services provided by a non-taxable online recipient. Confined only. So now ultimately the recipient will be the unregistered person, including the person as specified under 24 subsection 6 of the, what is that 24 subsection 6? It is nothing but a government entity which is liable to deduct the TDS under the GST law. So I think you all are aware, section 51 deals with the government entity, which is, they have defined what are the establishment of public sector undertaking, establishment of central or state government authorities, all those are defined in section 51. All those are entity are also fitting into the definition of unregistered person. I'll just try to read out for the benefit of members how they have brought an amendment in IGST Act. So non-taxable online recipient means any unregistered person receiving online informations and database access or retrieval services located in taxable territory. So they have very clearly, they have not brought out the condition of business, trade, commerce, all that has been removed. And they are very clearly that if the services are received by unregistered person, there is a forward charge on the supplier and not on the recipient. Now the important concept is they brought in the definition of unregistered person includes a person registered solely in terms of clause 6 of 24 of CGST. Who is the person who is registered? It is nothing but a person who is defined under 51 of the GST Act, who is liable to deduct the TDS under the GST law, is covered under the definition of unregistered person, and accordingly they are also not liable. They are also not liable for GST. So basically, it's more wider, no restriction of business, trade or commerce, and accordingly, if you are an unregistered person, including a government entity, there is a liability to pay the taxes by supplier and not by the recipient, along with the reading of notification 10/2017. I think I'm just trying to make it more clear for the reading of the section. Now the next section is OIDR definition is expanded. Basically, if we read the definition of OIDR, they have removed a part of that saying that essentially automated and minimal human involvement. There's a definition of OIDR which has been defined in 2 subsection 17 of the IGST Act. So they are trying to remove all this automated and minimal human involvement. Whether it is automated or not automated, it will still be covered under OIDR services, and accordingly, the scope of online data retrieval and access retrieval, they are trying to make it more wider, and accordingly, they want to cover it within the scope of the definition of OIDR by removing the word as essentially automated and minimal human involvement restriction is been proposed to be removed from the definition of OIDR. And next, the amendment is under 12(8) of the IGST Act. This is dealing with the services of transportation of goods, where the location of the supplier and the recipient of the services are located within the India. And this 12(8) is dealing with the transportation of goods, including by mail or by courier, whatever as the case may be. So what was happening was there was a provision which was there in 12 subsection 8 of the GST Act. The provision was stating that the place of supply in the case of transportation of goods will be the destination of the goods. So basically the destination of goods will be outside the country. So because of that, the recipient was not able to enjoy the credit, and there were certain technical glitches in GSTR 1 because of which they were not able to enjoy the input tax credit. So basically the recipient in India was not able to enjoy the credit because of this provision of 12(8) and because of this technical amendment in GSTR 1. So they have, government has issued a circular 184/16/2022 dated 27/12/2022, where they have tried to state that, try to clarify that the recipient is eligible for input tax credit. And simultaneously, they have said that the supplier should use this entry of 96 foreign country in GSTR1. There is a drop-down menu when you are going to select for that. So there is something called as 96 foreign country. Especially in this case, you have to use, so accordingly, the recipient can enjoy the input tax credit. Otherwise, it will lead into an interstate supply under 7.5, and they will end up paying the IGST taxes. So as you're liable for taxes, but if the recipient is not able to enjoy the credit, it may not fulfill the purpose. So that's why they remove the provision as if that provision never existed under the GST law. So that is what they have made a proposal, and circular is already issued earlier prior to this finance bill, and accordingly they have very clearly clarified that recipient is eligible for input tax credit. So I think this circular, if you read, I think that will give a better clarity for 12(8) of a IGST. Now the next very important aspect here we are trying to read is payments. Now next we have just dealt with all the finance bill. Now we are dealing with there are certain practical issues which we are facing day to day. So we are just trying to bring out certain important informations how the payments are happening. So if you want to make payment under the erstwhile law, in some of the proceedings we have seen that our department has advised us to make a payment through DRC3 by using your ledgers, and accordingly we were paying by using our electronic cash ledgers, and we have made a payment in certain scenarios. So later the government in 2019 has brought a circular saying that payments through DRC3 is not a valid mode of payment for making payment of pre-deposits under the central excise law. So you cannot make that payment. So accordingly, there is a specified portal, cbicgst.gov.in. In that, if you go to acs.login, you can make a payment of service tax of excise as the case may be. So this was issued. Now the issue is, this issue went to the Sestat, this was dealt in Sestat Allahabad case, where they have stated in the case of John C. Matthew Chemical India Limited versus Assistant Commissioner of CGST, they have very clearly stated in that case that deposit cannot be made by way of debit in the electronic cash ledger. So they are very clear that if there is any litigations pertaining to the erstwhile law, the payment should be made specifically under the respective portal and not under from the GST portal. So they have again issued a circular under the excise section as well as under the service tax section with the reference of 24137/14/2022, where they have very clearly stated that payment made through Form DRC3 is not a valid mode for making a pre-deposit. So all the erstwhile payments should be made by a specific login and not through a GSTR portal. Then next is utilization of credit balances. So basically, I think this amendment in section 49(4), where it's more beneficial provision, I can say, where they have tried to bring out that if you have a balance in the credit ledger, what are the scenarios where you can use it for the purpose and what are the scenarios where it is restricted. So if it is electronic credit ledger and if you have a balance in the electronic credit ledger, definitely you can use it for making the payment of output tax. In addition to that, you can also use it for paying any your self-assessment liability. But the most important amendment they have brought is that you can use it for the payment of any liability which is arising as a consequence of any proceedings. So because of any proceedings during your adjudications, if you have a balance in your electronic credit ledger, you can use it for making the payment. But you cannot use the payment for the purpose of electronic credit ledger cannot be used for any purpose like RCM liability, any erroneous refund sanctioned by the cash. That is, if you have to repay back your erroneous refund, that also has to be paid through cash ledger and not through credit ledger. Any payment of any interest, penalty or late fee, all this payment has to be made only through electronic cash ledger and not through electronic credit ledger. The issue is whether we can use electronic credit ledger while you are filing GSTR 9 and NC. I believe that yes, you can use it while you are making the payment, subject to depending upon what kind of tax payment you are doing under the GST law, especially while filing GSTR 9. many of the entities have used the electronic credit ledger and made a payment of taxes. And now the next question arises whether you can utilize this credit for making a pre-deposit at the time of filing the appeal. So the issue is yes, because though there is no specific clarification, but there is they have clarified based on the decision of Roma Builders Private Limited versus State of Maharashtra. And also they have issued a circular 172/2022, where they have stated that yes, credit can be utilized for making a pre-deposit, whatever that 10% or 20% at the case will be, that can be utilized at the time of filing the appeal. So I think this is most helpful. It will not block your working capital. You can use a credit if there is anything for making a pre-deposit at the time of filing the appeal. Next is now the next is filing of GSTR 1 and 3B. I think there is always an interplay between GSTR 1 and GSTR 3B. So basically, now the government is trying to regulate the filing of GSTR 1 and 3B, and it is interlinked with each other. So if you look into the notification 18/2022 dated 28/9/2022 and reading with the section 37(4) and 39(10), the government is it's trying to bring out that the taxpayer shall not be allowed to file GSTR 1 if the previous GSTR 1s are not filed. This is the one amendment which has been made. And the taxpayer shall not be allowed to file GSTR 3B even though the GSTR 1 for the same tax period is not filed. So if you are not filed by the 11th of the following month, you will not be allowed to file the GSTR 3B as the case may be. So without filing GSTR 1, 3B cannot be filed. And filing of GSTR 1 is mandatory before filing 3B. This is the most important amendment they have made. And if there is a mismatch between GSTR 1 and 3B, the department can give the DRC 1B. I'll just deal in the next slide how they can make an intimation. And the most important is, I was just trying to read one of the circular notification in Rule 21, where they have stated if there is a GSTR 1 is more than GSTR 3B, the option is given to the officer to cancel the registration. So we have to be very careful whenever we are uploading our GSTR 1 and GSTR 3B under the GST law. Otherwise, it will lead to multiple consequences and it will hold the further compliances under the GST law. So basically, this DRC 1B is given in part A, where they will be highlighting what is the difference between GSTR 1 and GSTR 3B, and they will make you to make a payment of differential taxes, and they will ask you to make a permit through DRC 3 and furnish the details in part B of your DRC 1B. And because of this, the taxpayer will not be allowed to file further GSTR 3B or GSTR 1 if it is not filed. And they will also see that because there is a possibility that because of typo error or because of any error, because of any reason, there can be a difference between the GSTR 1 and GSTR 3B. The reasons can be explained by replying in DRC 1B. There is a part B, you have to give your reply, and within 7 days of the issuance of DRC 1B, like typo errors. There are possibility of many reasons, but the difference can be explained in part B of DRC 1B. And in such cases, non-compliances, recovery proceedings would be initiated against the taxpayer. So in case of non-compliance, but practically we are able to see that they're issuing an intimation, and if you give the valid reasons, they are not going for recovery proceedings. And basically, if you are not replying to that notices, then you will not be allowed to file your GSTR 1 for the subsequent tax period until a response to such form has been furnished. So until the reply is not furnished under DRC 1B, then you will not be permitted to file the GSTR 1 for the subsequent period. So we have to be very careful on this aspect. Then the next important is rate of interest, which is at 18% under 50 subsection 1. Most importantly, they try to bring out amendment in 50 subsection 1. I think this issue is revolving around the authorities during the time of adjudications, where we are trying to utilize our input tax credit for our subsequent liabilities. So basically, the intention of this 50 subsection 1 is you cannot adjust your past liability against the subsequent credit or future credit. So basically, they have brought a mechanism how to compute the input tax credit, in what scenarios it will be a net basis and in what scenarios it will be a gross basis. So if you try to look here, if you try to understand from this illustration, see, for example, your outward supply was pertaining to July 2022. You have already reported in the returns of July 22. You have already filed within the due date. So there is no question of interest. There is an outward supply which is made in 2022. You have reported in July, but you have delayed in filing your returns by, say, 5 days. Then interest will be applicable on that liability discharged by you, because you are liable for interest. You have to utilize your cash ledger. Now, the most important is what I can say is the most important is here where the outward supply was pertaining to July, but you have reported not in the month of July. You have reported in the month of August 2022. And you have filed the returns by September 2022. So you have delayed in reporting that return. So interest will be applicable on the total liability. You cannot enjoy that net basis, and accordingly you will end up paying on gross basis and not on net basis. So I think this is what the amendment which we have tried to bring out in 50 subsection 1 of the GST. Now, the next important is computation of interest. I think this is the most important, which we all have to be aware. How to compute the interest, how much is a balance. This is a monthly computation which has to be computed. So if we try to understand this applicable in case of, we are very much aware today that interest will be leviable only if the input tax credit is availed and utilized. If it is only availed and not utilized, there is no question of interest under the GST law. And rate is 18% will be continued for 50 subsection 3, which is specified in notification November 2022. So previous to that, it will be 24, but now it is 18%. And the most important is how to compute the interest applicable. For example, you have wrongly availed input tax credit of 100. You have balance in credit ledger as 500. There is no question of interest. If you have balance in electronic credit ledger, there is no question of interest. But if you have balance in electronic credit ledger of 90 rupees, then you are liable for interest at only the balance 10 rupees, 100 rupees minus 90 rupees. So only on the balance 10 rupees, you are liable for interest. So this is one important aspect which we have to understand when you are calculating the interest under the GST. And the next important amendment is formula for inverted duty structure refund. We are very much aware that there is a 54 subsection 3 deals with the inverted duty refund. What is that inverted duty refund is? Where your output tax rate is less than your input tax rate of on input. So basically, government has stated that wherever the rate of tax is less on output and your input rate is high, you can take the refund on your inputs as the case may be. So because of this, there was a revision of a formula in July 18, 2022. So the issue is whether, because of this revision of formula, whether you have to, whether this revision of formula is applicable only for the applications which are filed after 18 July 2022, or can this revised formula will be applicable even for the refund applications which are pertaining prior to 18 July 2022, but which are filed after 18 July 2022. So I think they are very much clarified here, saying that in 181 bar 13 bar 2022, they have stated that even you can file the refund applications for the earlier period also with the revised formula. Most important, I think we have to be very clear when you are looking. So it is permitted with the revised formula, you can even file the refund application pertaining to the earlier period also prior to 18. For example, say you have to yet to file the refund application, say for Jan 2022 to say March 2022. So you can apply that revised formula and you can file the refund application post July 2022. So this is what they have specified. And I've just tried to bring out this just a formula, how to compute with the revised formula. A quick, I'll just take it up. So your IDS turnover is say 10,000. Your regular turnover is say 2,500. So total of your turnover is 12,500. And you have input tax credit of say 5,000 plus 1,250. So basically your input tax credit on input is 5,000. Your input services are 1,250. So if you try to see that before the input tax credit, whatever you are eligible is, only on inputs you are eligible. So 5,000 you are eligible to take input tax credit, and proportionate credit, if you arrive 10,000 divided by 12,500 into 5,000 is 4,000, minus 500 is your output tax. So accordingly, you are eligible for refund for 3,500. But after amendment, because of this revision of formula, everything will remain the same. But the output tax, whatever this 500 I have computed, this 500 has to be computed proportionate to the inputs which is pertaining to the input tax credit. So 500 into 5,000 divided by 6,250 will be your 400. So accordingly, because of the revised formula, there is an increase in the refund under the GST law. Hope it is clear. If it is so, we'll just discuss at the end if there's any issue on this. I think this is one of the most welcome circular which has been issued. This is pertaining to the reporting of 3B. I think most of you are well versed with this reporting. I need not go into much detail on this 3B. Basically, I want to bring to the highlight of the members who are not dealt much with this. They have amended the format of 3B and they have made it very clear that whatever the credit is there in 2B, only to that extent you can take those credit in GST 3B, and whatever the reversal you are going to show under 4B1 of your GST 3B, if there is a permanent reversal which you are going to make, that has to be disclosed in B1. And if it is just a temporary reversal, like payment not within 180 days, all that, temporary reversal should be shown in 4B2. If by mistake temporary reversal, if you have shown under permanent reversal, you will not be able to reclaim that credit under 4D1 of the GST. You cannot reclaim that because that reclaim is permissible only for 4B2 and not for 4B1. So we have to be very careful when you are filing out GST 3B so that we are within the purview of law, and you have to be all temporary reversal should come under others. Only the permanent reversal should be there under 4B1. Right? So this is one of the amendments which is effective from July 2022 or September 2022. And next is a refund application by the customers in the case of cancellation of flat. This is also most welcome, where especially in the case of construction contracts or in the case of real estate or insurance contract, they were not able to, because there is a time limit to issue the credit note under the GST law, that is within by the end of the September or the November as the case may be. By the next September or November, you can issue the credit note. But this is being a long duration contract and it is a continuous supply of contract. The cancellation can happen after 2 years or 3 years as the case may be. So to avoid all that intricacies, the government has brought out a circular stating that in such cases, the recipient as a customer itself can apply for a refund under the GST law, and he can, there is a procedure that he has to take a UID registration and can apply for the refund, submit all the documents, whatever is required for the refund, and accordingly he will be liable for refund. So basically this 2 years will be calculated from the date of cancellation, and he can apply for the refund under the GST law. This has been defined in Circular 188/2022. Then this is also one of the issue which is revolving around like service of renting of a residential dwelling, which is now covered under the RCM. This we are very clear. Wherever the services are rendered, the renting of residential services are rendered to a registered person, the registered person is liable to pay tax under the reverse charge. It has been defined in notification 5/2022. And there's one more they have clarified in December 2022, where they have said that if the renting is given by a registered person, but if he is a sole proprietor and if it is in his personal capacity, then in that scenario, there is no question of a reverse charge by the recipient, and accordingly, there is no requirement to pay the taxes if it is not used in the course of business, but it is used in a personal capacity. In that cases, there is no requirement to pay the reverse charge. So this has been clarified in 15/2022 for further clarifications. So if there is a service of renting of residential dwelling for use as a residence to an unregistered person, there is no question of taxes. But if the resident is given to a registered person, it is liable for reverse charge by the recipient. And this IBC, I think most of you are very clear that statutory dues is whatever is covered under this IBC is also are also as secured creditors for claiming their tax dues. So generally the department will submit their claim to the authority, and during the moratorium period, they cannot do any recovery proceedings against the taxpayers. So after once the proceedings are completed, then the commissioner can issue an intimation in DRC 25 to the taxable person from whom the recovery proceedings was pending. So this amendment is made in Circular 187/2022. Then there is a requirement of declaration in the invoices. This I just want to bring out because this also can lead into a small penalties under 122 as the case may be. So if you are a person exempting from e-invoicing like SEZ or GTA or banking company or transportation service or the cinema exhibitors, all these persons are not liable to issue the e-invoices. But if that threshold is exceeding the limit, like for example, today the limit is 10 crores, then in their invoices, they have to declare stating that we hereby declare that our aggregate turnover is more than the aggregate turnover as notified, and we are not required to prepare invoices based on the notification put in. So this explanation should be there in their invoices to give an clarity that they're exempted from GST and they are covered under 14/2022. Now, then they made an further amendment. They have brought out a clarification in 186 saying that, for example, banks are exempted, banking companies are exempted from e-invoicing. So if they're invoicing, if they're exempted from invoicing, but if they're doing anything other than the banking transactions like sale of gold coins or sale of bullions, whether in that scenario are they liable to generate the e-invoice? This issue was there. So through circular 186/18/22, they are very much clarified that even in such scenario also, banking company is not required to issue the e-invoice with respect to the supply of that gold coin or bullion as the case may be. So I think this is also one of the requirement for e-invoicing under the GST law. They were proposing to make it as a 5 crore, but as of date, still the e-invoice turnover limit is 10 crore and not 5 crore. Then there is a facilities which is introduced for cross transfer between the electronic cash ledger. Till few days back, I was able to see it was not activated. I don't know after that if it is activated. There is a facility which has been given, especially in the case of distinct entities which are located across India. And if they have surplus balance in the cash ledger in one of their distinct entity, it can be transferred to the other distinct entity in the other state. Subject to the condition that there should not be any liability in the liability register. And most important is you cannot transfer from CGST to SGST or SGST to CGST. That is not permitted. Otherwise, you can transfer the balances from electronic cash ledger of one state with the other state balances as the case may be. This has been defined in notification, more clear in 9/2022 and 14/2022. And the form specified is PMT09. And next is this Rule 37A, where they have brought out one more important, what I can say, new rule which has been introduced, where they have stated that if the supplier has not made a payment of taxes, say till next September of the financial year, then the recipient has to reverse those input tax credit, and what it can again reclaim the credit once the supplier makes the payment of taxes on those input tax credit. So I think this will definitely will lead into a reversal, and there is no time limit as specified in the case of reclaiming of such credit. So I think if you have claimed it and then again we're going to reverse it, and so that's the reason there is no time limit as specified. So based on this notification 26/2022, basically if we pay subsequently by after paying interest, then the recipient can enjoy the input tax credit within the specified time. Then this is also, I think this was awaited from long time for clarification on treatment between 2A and 3B. I think most of the entities have received the notices under the GST law for the difference between 2A and 3B, especially for the year 17, 18, 18, 19. So the government has brought out a circular giving the scenarios where you can go for apply the circular and accordingly claim the benefit of input tax credit, especially like if GSTR1 is not filed by the supplier, or tax invoice was not declared by supplier, or supplier reported as B2C instead of B2B, or wrong GSTN was mentioned of the recipient. So all the scenarios they have tried to bring out under the GST law. And officer, they have given what officer is supposed to do when he is going to look into those invoices. So they have just said that all these conditions should be looked into by the proper officer. And if the input tax credit is exceeding 5 lakhs, they have to take a certificate from a chartered accountant. And if the amount of input tax credit is less than 5 lakhs, then certificate from CA is not required. So these are the clarification which has been given in circular whenever there is a difference. So we can apply the circular and accordingly we can make a reply to the officer by producing the supporting documents as stated in the circular. Now the most important is whether this is applicable only for 17, 18, 18, 19, or is it applicable for 1920 also? So we have in Karnataka High Court, there was a recent judgment of Wipro Limited India versus Assistant Commissioner, where there was a wrong mentioning of GST. So basically, the High Court has held that the SSC should be allowed to rectify the bona fide errors committed in filing their forms and GST returns. And these are the similar errors which has been specified in circular for the 17, 18, 18, 19. So accordingly, this benefit should also be given in 1920. As on date, till there is no circular issued, but we can rely on this High Court judgment, and accordingly, we can try to take benefit even for the financial year 1920 also, whenever there is a difference between 2A and 3B. Then next, we have a circular for procedural amendment with respect to the appeal. Basically, they say that today we are able to see that there are many times the orders are not uploaded in the portal, and DRC7, either DRC7 is not uploaded in the portal, or DRC7 is uploaded, order is not uploaded. We are able to file, see the various things which are happening for the uploading of the order. So in case if you are filing the appeal, the government requires that the certified copy of order should be filed within 7 days from the date of filing the appeal. And especially in the case of manual filing, it is very much required. You have to produce that certified order along with within 7 days from the date of filing the order. And there is also a provision given for withdrawing the appeal by using that APL1W or APL13W, wherever you want to withdraw the appeal, either prior to the order, and the withdrawal will be subject to the approval. So this has been analyzed in notification 26/2022. And this I just try to just give a very brief that we are very much clear that in 75 subsection 3, the law has stated that if the taxable person is adjudicated under 74, treating it as a fraud suppression, and later on it is found that they are not covered under 74, they are covered under the regular adjudication under 73, then the government has stated that the computation has to be made under 73 and not under 74. So accordingly, the government has brought out this amendment, clarification in circular 185, basically where they have stated that in such scenario, the officer should redetermine the tax liability within 2 years from the date of communications of the directors by the appellate tribunal or court as the case may be. And if the show cause notice itself is issued beyond the normal period of limitation, the entire proceedings will be dropped. I think if you can just read the circular, that will give you better clarity to understand how the mechanism has to be, how it is shifted from 74 to 73, and how it will be computed under 73 of the GST. So but the most important is the show cause notice should be issued within the time limit specified under 73. If it is not issued within the time limit specified under 73, then the whole proceeding itself will get dropped. So you have to check whenever the case is taken from 74 to 73. Please don't forget to check the limitation period specified in 73 for issuance of show cause notice. Then recovery or this, anyway, we are very much clear for 17-18, the time limit to pass the order is up to 30th/9/2023. Earlier it was 5th February, now they are it as 30th September 2023. So still there is a time for doing the adjudication for the financial year 17-18. And for the period from, I think if any refund applications are not yet filed, they have brought in earlier there was a Supreme Court judgment also, but along with that, they also made an amendment in the Act also, stating that for the period 1 through 2022 can be excluded whenever you are going to complete the refund applications. So if any refund applications are due for the period prior to 2020, and if it is fitting into the 2 years from the relevant date, I think the applicant can enjoy that benefit and make an application for refund under the GST. And tax invoice issued to an unregistered person. This is also one of the amendment. I think most of us are not complying with that. If you are making any supply to an unregistered person or to an e-commerce or to an OIDR, you should also add the recipient name and address and PIN code in addition to the existing particulars. I think this is most important. We have to suggest that whenever B2C invoices are used, they have to add up the name, address, and PIN code wherever required. So I think extensive information will be taken through the issuance of invoices by way of this notification. And proportionate, I think this is fine. Now, there are certain exporters which they have identified as a risky exporters, and these are being identified by DGARM. And they will just analyze whether you are complying with the law, they are going to study your case. And if they check all your risk parameters, and if they are complied, if they are satisfied, then they are going to file this. They are going to proceed this to the refund officer, and accordingly, refund officer will issue a speaking order under as a GST Article 6, depending upon the parameters and depending upon the documentations and other informations. So this has been given under instruction 4/2022. And very important is, I think in GSTR 1, the disclosure of HSN was optional. Now they have made it effective from 1 November 2022. They have very clearly stated that if it is above 5 crore, 6 digit has to be mentioned. If it is below 5 crore, 4 digit is mandatory. This one I just want to bring. I think this is a very important conditions which they have introduced from October 2022. We always believe that we have 4 conditions for to take an input tax credit, which has been specified in under 16.2 of the GST Act. But in 16.2, there is also called as 16BA. So that is also introduced, which states that input tax credit should be eligible under 38 of GST Act also. If it is not eligible under 38 of GST Act, you cannot enjoy the input tax credit. So what can be the conditions which are introduced in 38 of the GST Act? So not only these 4 conditions should be fulfilled, it should also be seen that input tax credit should not be restricted in GST 2B. This is the one condition. Restrictions are on supplies from suppliers. If he has taken new registration only for some special purpose, or if he has defaulted in payment of, if the supplier is committing some offense, ultimately the liability is shifted to a recipient for not taking the input tax credit. If he is defaulting in payment of taxes for prescribed period, or if he has where output tax payable as per GSTR 1 is exceeding the GSTR 3B, or where he has availed the excess input tax credit, or where he has not discharged the input tax credit. The tax liability as specified like 99%, 1% as the case may be. So if he has not complied with all these conditions, if he has not fulfilled the conditions as specified in 38.2, then also the input tax credit will get restricted to the recipient. So I think whenever we are going to read this additional conditions for entitlement of input tax credit, you also have to read 16BA along with section 38.2 of a GST Act for availing the input tax credit. Then availment of ITC on self-assessment basis. This is earlier there was a provisional credit of 10%, 5%. We don't have such. So now everything is on a payment of taxes by the supplier. And there is an extension of time limit for the input tax credit entitlement and credit note. Earlier it was due date of filing the September return. Now it is till the end of the November 2000 as the case may be for each financial year. And this is commonly it is happening under 29 subsection 2 of the GST Act, where there is a power given to an officer after giving an opportunity of being heard to cancel the registration if they are not filing the return within the specified time. So if if he is a composition taxpayer, if he has not furnished the return for a financial year beyond 3 months from the due date of furnishing the return, then he is not his registration will get cancelled. Earlier, what was happening was the cancellation was permitted only if he is not filing for 3 consecutive tax periods. So now they have changed it and they have made it that within 3 months from the due date of returns, if he has not filed the returns, his registration will get cancelled. And for regular taxpayer, they have very clearly stated that if he has not furnished for a continuous tax period, the tax period is not yet notified. Earlier, it was if you have not filed for 6 consecutive tax periods there. Now it is not furnished the return for continuous tax period, his registration will get cancelled. So this is for non-filing of returns. And for relevant date for supplies to made to SEZ, this was not defined for the claiming the refund. So now they have defined it that relevant date whenever the supplies is made to an SEZ unit or developer as a 0 rated, it will be the due date for furnishing of return under 39 in respect of such supplies. So they have brought out the relevant date equal for supplies to SEZ, and accordingly the due date of furnishing the return will be the relevant date under the GST. Then next is late fee was not there earlier for e-commerce operator. They have introduced this late fees for e-commerce operator, that is 100 rupees per day, which might extend up to 5,000 as the case may be. Then utilization already we have disclosed. The government was not given the power. Now they got it. Mandatory invoicing is if it is above 10 crore. And the next important amendment which has been taken place for the educational institution is, as we are aware that there is an exemption which is given to an educational institution where if they are providing the education services to the students, staff, as the case may be. Now they have, the issue was, for example, in an educational institution, if a person is going to take an admission, whether you can call that as a student or he will be a prospective student. So whether the exemption can be enjoyed by the prospective student also. So they have made a clarification through a circular stating that even though the fee is charged from the prospective students for entrance or admissions or for eligibility of any examination, they can enjoy the exemption. So the exemption today is not only to the existing student, the exemption is given even to the prospective students from the GST. So I think migration certificate by education to the leaving student, ex-student is also exempted. So basically they have tried to clarify that he can be a prospective student or he can be an ex-student or he can be a student who is going to leave the course. So all the students are also forming within the definition of student, and accordingly the exemption can be enjoyed by the educational institutions. And the next is selling of space for advertisement in souvenirs published in books. So this will attract the rate of tax at 5%. Now, this is one of the most complex issues which is going around. There are multiple decisions, advanced ruling, whether the development of plot, say, is liable for GST, whether the sale of land after leveling, laying down of drainage line is taxable or exempted. So basically they have issued a circular 177 where they have said that if the land is sold after some development like leveling, laying down of drainage or water lines or electricity lines, they have very much clarified that it is treated as a sale of land and accordingly it is covered by third schedule and accordingly not liable for GST. But they have also clarified in that any services provided by a developer or a contractor to a developer, that will be liable for GST. So like it can be leveling or laying of drainage lines as the case may be. So basically they have said that only the contractor is liable for GST and not the person who is going to sell the land is liable for GST. So I think this is only a clarification which is issued through a circular and this is binding on the officer. So, but still there are various school of thoughts on this plotted development, whether there is levy of GST or not. So we have to wait and see how it is going to be concluded. There are one school of thought says that it is a sale of developed land and accordingly not liable for GST. The another school of thought says that it is a construction services which has been rendered to the recipient customer and accordingly liable for GST. And the third school of thought says that it is a works contract which has been entered with the customer and accordingly it is leviable for GST. So there are various school of thoughts are going around for this plotted development, but it has been clarified through circular that if it is a sale of developed plot, there is no levy of GST. Then this is also one of the interesting issues I just would like to bring to the notice of the members. See, in Circular 177 by 2022, they have said that in the case of reverse charge, there is an implication of reverse charge only when the body corporate is hiring the motor vehicle. But if they are taking that motor vehicle for the transportation of passengers or for the transportation of employees to and from work, like from home to office or office, like where the destination is predetermined, where the schedule is predetermined, in that case, they're trying to bring out saying that there is no implication of reverse charge. So there is very thin line difference between if you are renting a motor vehicle and they are using it as per your disposal, then the law is clarifying saying that there is a levy of reverse charge tax. So very clearly, they have stated in the circular that it has been clarified that where a body corporate hires a motor vehicle for transport of employees for a period of time during which the motor vehicle shall be at the disposal of the body corporate, the same shall be liable for GST. But if it is not at the disposal of body corporate, it is only for a scheduled transportation, then there is no levy of GST and it is exempted. So I think this is creating a controversy, but as on date, it is clarified saying that it is liable for GST only when it is companies hiring a motor vehicle and where the destination is not determined, where it is not scheduled and it is used at the discretion of body corporate, it is liable for reverse charge. I think this circular can be referred and it can be analyzed accordingly. Retrospective change in the interest. So some of the adjudication order, if you see, the rate of interest, they are making it to 24%. So I think this notification can be read, and you can apply it wherever possible to say that retrospectively, earlier it was 24, has been made as a 18% in the notification 9/2022. So that to that extent, the interest can be saved for the SSC. Then the deemed revocation of registration. So for example, in case of non-filing of returns, the officer is going to suspend your registration, suspend the registration. And once the person apply for revocation of cancellation within 90 days, then accordingly he can revoke that cancellation. Otherwise, it will be deemed that it is, but if the cancellation is already, if the registration is already cancelled, then you cannot go for a deemed revocation. So the law is very clear. If it is cancelled by the officer, there is no option for reopening that registration. But if it is only suspended, then only that registration can be revoked, and accordingly it can be again after filing the returns as specified by the taxpayer. So it is more like a more clarity and more clarification. Otherwise, this was an issue whether if the department has already cancelled, whether the revocation can be made by the taxpayer. So they have made it more clear on this. And next notification is they have very clearly stated that you need not make any reversal of common credit if there is a supply of duty credit slips, because it is treated as an exempt supply, and accordingly there is no requirement, though it is treated as an exempt supply, but there is no requirement to reverse the input tax credit for the purpose of duty credit. Not required to reverse the input tax credit under Rule 42 and Rule 43 as the case may be. They have added additional modes of payment like IMPS, UPI. They have added as an authorized mode of payment for deposit of taxes. Then recredit of e-credit ledger of deposit. I think this we have already discussed. One more very important amendment they have brought it with respect to this value of export of goods, where they have stated that whenever the refund is going to be claimed under this rule, you have to determine the FOB value in the shipping bill or value declared in the tax invoice, whichever is lower will be considered for value of export under the notification 14/2022. So I think this is one of the important amendment which we have to determine when you are filing the refund applications. And withdrawal of refund of tax paid by duty-free shops. So they have deleted Rule 95A from the GST rules, which is effective from 1/7/2019. So earlier the refund was given to duty-free shops. Now the mechanism of giving a refund of tax paid to duty-free shops is being removed, and there will be no further refund for such duty-free shops. They are not longer available for their retail outlet, even though they are making a tax fee to an outgoing international tourist. So this has been clarified through circular notifications 14/2022 and circular 176/8/2022. And I think, in some of the scenarios, there will be a difference between the value declared in the shipping bill and the value declared in GSTR1. So generally, in the case of export of goods, shipping bill will be determined as a refund application for claiming the refund. But if there is a mismatch between the value stated in shipping bill and the value stated in GSTR1, then it has been clarified saying that once this mismatch has been rectified, that will be the date on which the date of filing the refund application will be considered, and not the date of the shipping bill. So this has been clarified through a notification 14/2022. And this is clarification and refund of ITC for deemed export supplies. I think here there just is a clarification. They have stated this input tax credit, which will be claimed as a refund either by the supplier or by the recipient. This input tax credit is only for the purpose of deemed export purpose, and not for claiming the refund under inverted duty structure or under the purpose of export. So basically, it is meant only for deemed export and not for any other purpose. The next important circular which has been brought under 172/4/2022, I think this is also one of the important circular where they have tried to clarify, especially when the perquisites which are given to the employee based on the employment contract will not be subject to a GST. So the circular is very specific, stating that if there is any perquisite which has been given by the employer to the employee, then it is not subject to GST. But if there is any perquisite which is given beyond the employment contract, that will be liable for GST. So this perquisite, we are not referring to the perquisite as defined under the Income Tax Act. This is a perquisite which is outside the scope of the employment contract. So whether the agreement, you have to be very careful looking into the agreement with the employers to understand what is the scope of expense, what is the scope of services which is covered for the services rendered by the employer to that employee. If it is not covered within the scope of employment contract, it will end up paying the GST, treating it as a supply of services by employer to employee, being a related party and liable for GST. Then I think I'll just go in brief. The next is accommodation services. They brought an amendment, especially in the case of clinical establishment, where it is except like ICU and other thing. They have stated that if the room rent is exceeding 5,000 rupees per day, then there is a levy of GST even for the clinical establishment and hospitals, as the case may be. This was introduced in July 2022. And we were trying to understand that the concept of composite supply, because basically the healthcare services are exempted from the GST. So when the healthcare services are exempted from the GST, how can they levy the GST on the component of room rent, which has been collected from the patients? So basically they have made an entry in exemption notification itself saying that, except that wherever you are charging room rent above 5,000, there is a levy of GST. So this one amendment which we have brought it for clinical establishment. And for hotel accommodations, if it is less than 1,000, liable for all the short-term accommodations like lodging and all, where they were enjoying the exemption under entry 14 of 12/2017, where hotel accommodation up to 1,000 was not liable for GST. But from July 2022, they have made it as liable. So from 0 rupees itself, there is a levy of GST for the hotel accommodations. Now there are various issues which is going on, whether there is a levy of GST on hostels, PG, is it different from hotel accommodations? Because this clarity is awaited further, and whether we can treat it as a residential dwelling based on the case of Vasudeva Amrish case of Karnataka High Court, or whether we can rely on Circular 38, which has been issued in 2018, saying that it is below 1,000 rupees per day, so accordingly not liable for GST. So there are a lot of thought process which is going around for the levy of GST on hostels and PG. And can it be treated as a commercial purpose, or can it be treated like a hotel, camp, or like manner, or will it be liable to tax under residual entry, or can it be treated as a renting of residential use dwelling for use as residence? I think there are different thought process on this, and we have to await for a further clarification on this to understand whether there is any implication of GST on hostels. Some of the PGs and hostels are paying the GST, and some of the hostels are enjoying the exemption, treating it as a residential dwelling, which is used as for the purpose of residence, relying on the Vasudeva Amrish case also. So I think we have to wait and see how it is going to take forward on this. There are different school of thoughts on the application of GST on hostels or PG, as the case may be. And residential dwelling to registered person liable for RCM, we have already understood. And whether input tax credit is eligible, yes, it is eligible as long as it is used in the course or furtherance of business. And next impact amendment, they have brought it for the Goods Transport Agency. There is a complete change in the tax structure which they have made it for GTA, which is also effective from July 2022. They have added the definition of consignment note in the definition of Goods Transport Agency. And they have also given the option to the supplier, that is to the GTA, either he can opt for forward charge mechanism or reverse charge mechanism at the beginning of the year. So if he's in the forward charge mechanism, he also has the option either to charge 5% without input tax credit or 12% with input tax credit. That option is given under the forward charge mechanism also, and he has to submit that annexure as the case may be. So for 22-23, he will be filing by the next year. And the most important is that the GTA, whenever he is going to issue the invoices, he has to carry the declaration saying that this tax is under reverse charge or whether this tax is paid under the forward charge. This is very, very important to understand whether there is a levy of GST under reverse charge or it is liable under forward charge. And the most important is they have removed the small exemption of 750 and 1,500, which has been withdrawn from July 2000. Otherwise, earlier in service tax and even under the GST, the benefit was enjoyed of 750 and 1,500. That has been removed and liable for even a small transport consignment. For small consignment, also there is a levy of GST as a GTO if it is provided by goods transport agencies. So the small exemption of 750 and 1,500 has been removed from July 2022. This also I just have discussed time before that you have to give a certified audit. And some of the, we are receiving an inquiry that we did not got this order uploaded in the portal. How can we file the appeal? So basically they are trying to clarify that wherever the order is not uploaded in the portal or wherever the DRC 7 is not uploaded, you can make an intimation to a respective officer to upload the order in the portal along with DRC 7. If it is not uploaded, there is still an option to file the manual filing of application. And accordingly, you have to furnish a certified copy of order also after you are filing the application for appeal. So this is what they have clarified. Even if you are filing manually or you are filing through online, even though you are filing the appeal through online, after that also still there is a requirement to file the copy of that appeal acknowledgement along with the this paper of appeal to the appellate authority along with the certified copy of the order. Basically, this they have brought it so that they are in consonance with the verification of the order and whether it is uploaded online or offline. They're able to access it and accordingly they can give an acknowledgement to the appeal which is filed by the appellate. Then next is this forfeiture. There is a circular which has been issued in 178 dated 3rd August 2022, which is commonly I thought it will be applicable, like forfeiture of salary or payment of bond amount in the event of employee leaving the employment before the minimum agreed period. So basically with this clarification, they have analyzed that there is no such supply and accordingly such amount, whatever is received when the minimum agreed amount when the employee is leaving the organization, that amount is not liable for GST because there is no return which is going to get received from the employee. And they have changed the rate of taxes for a lot of works contractors. So I think we have to check again whenever we are looking the rate of taxes. A lot of construction works contract services are, the rate of taxes are changed. Even the services by way of licensing, registration and analyzing of test of food samples by FSAI is earlier it was exempted, now 18%. All this training or coaching in recreational activities relating to art or culture, if it is by individuals, it was exempted. But if these are provided other than by individuals, it is liable for GST at 18%. E-waste is also liable for, earlier it was 5%, now they made it as 18%. Solar water heater system, all this rate of taxes are amended from the respective date. And this was also taken in 48 council meeting. After that, they have plotted certain amendments in the notifications, where they have tried to say that earlier it was 5%, now it is taxes, all this rough triumphs, motor vehicle. So certain products are identified where they have change the rate of taxes and accordingly they have passed the notifications. So I think these are the common, the most relevant amendments which I've just tried to highlight for the benefit of members. And basically today we are able to see that a lot of issues are coming around in the movies, like the transactions between the holding and subsidiary company, loan processing charges, corporate guarantee charges, 180 days payment, beyond 180 days payment, all these RCM payments, if you are going to pay pertaining to earlier period, can we take credit for the current year? The difference between 2A and 3B, the various reasons for difference between 2 and 3B, and 5O of 9C, what are the component of 9C, what is the explanation, why tax? So a lot of DRC 3 for differential table suggestion. So a lot of this kind of notices are coming around and we are waiting for further clarifications for various issues which is evolving around. And I think a lot of clarifications are coming within a short span of time, but there are still various issues which is evolving around and I think we have to wait for further amendments under the GST law, further clarifications under the GST law for certain issues which is taken. So I think this was I've just tried to highlight on this recent amendments and budget amendments of Finance Bill 2023. So we have time of 10 minutes. So the member is can unmute and can ask the question, or I can just do the chat box. Please arrange for a webinar material, send the PDF. Yes, it will be shared. This material will be shared with the members. And question answers. Dear Madam, if the supplier who is supplying exempted goods but wrongly charging GST amount in the invoice, then the buyer is eligible to claim the ITC on the same. See, if you are not liable for taxes and if you are paid the taxes, then you cannot enjoy the benefit of input tax credit, and that will be treated as excess tax collected, and you will end up paying the taxes as forfeited tax under Section 70 of the GST. So you cannot enjoy the ITC of the same. Then next is Rule 21 leading to cancellation. Please confirm this, because that is what it is taken place in 29 Section 2, where they are trying to add up for cancellation of registration. It is defined in Rule 21 of the GST rules. And that power has been given for them to cancel the registration. And reimbursement of business promotional expenses like lodging and traveling of director, can ITC be claimed on GST paid? Traveling of director can reimbursement of business like lodging and traveling. If it is fitting into 17.5, then it is not liable. Otherwise, it can be claimed. So basically, you have to check whether the lodging is within the state or outside the state. And traveling is also basically, if it is not restricted to 75, you can take the credit. So I think I'll just try to answer the issues. If there's any other issues, any other members can unmute and can answer.
I think there are no other queries, ma'am.
Okay, so we'll wind up.
We can wind up, I think. Or
Yes.
If there's, I think there's one more question and answer which has popped up, Tom. Ma'am, please confirm how to address the subsidiary and holding companies. State GST authorities want to charge GST under SAC code 997171.
Yeah, this issue is revolving around, and they are trying to charge the GST, the transactions between subsidiary and holding companies. Basically, I think wait because this will be higher court, and it will be analyzed in the higher court, and it will be concluded, because there are only the transactions which are taken place in the financial transaction, but still the department is taking it as a supply and levying the taxes, though it is a financial transaction. So I think it will be decided at a higher level. It has to be litigated at the earlier stage, and it will be not confirmed at the lower authority. It will be confirmed at the higher authority on these issues, depending upon the kind of services between the subsidiary and holding companies. So in some of the instances, even the financial transactions also, they are treating it as a services between the holding company and subsidiary company. So it has to be, each services has to be tested and analyzed, and has to be seen, is there any implication of GST? Otherwise, it will be decided at higher levels. It is still a burning issue. There is no such conclusion as on date. So we have to wait and see how it is going to get settled at higher level. Yes.
There are a few more questions.
Yes.
What is the consequences of non-generating of e-way bill, but supply has already happened?
See, what is the consequences of non-generation, but the supply? If the, see, basically this e-way bill is to evidence the movement of goods from one place to the other places. So if already the movement has completed, and if there is no check push which has been taken place, then I think you can just try to say that the transaction has been completed, and accordingly you can. There's no such any penalty. There's no interception by the officer, and you have to explain the reasons whenever they are going to give a reconciliations between the e-way bill and GST as the case will be. Otherwise, there is no such consequences for non-generation of e-way bill, even though supply has taken place. GST paid on loan processing fees, can we claim ITC? Yes, you can claim the ITC. But taxes has been paid correctly. No, I think Shivaj, you are continuing to that point. Yes, no issues. If renting of commercial property to registered person by an individual person, is GST applicable. Recipient is a college. So whether the owner is because see this reverse charge is applicable only for the residential property. If it is a commercial property, then the liability will fall on the supplier of services and not to the recipient of services. So Prashant, I think I'm clear here. Even though the recipient is college, but if the renting of commercial property is made by a person, supplier, the liability is on the supplier and not on the recipient, even though the recipient is a registered person. Because this reverse charge is applicable only for residential property and not for commercial property. Is recipient responsibility to check the declaration about e-invoicing not done due to turnover within the threshold limit? I think that is not, as on date, that condition has not been specified, but soon it might be adding a condition in 38. As on date, that condition is not specified. So you need not check the declaration of why he has not issued the invoice. That is the liability of the supplier and not the liability of recipient. Yes.
That's all we have for the questions, ma'am. I thank all the participants for attending this virtual session, and I also thank CA Annapurna Kabra for taking the session on the latest amendment on GST in the latest budget. Thank you for your lively session, ma'am. All the questions were answered. Thank you.
Thank you so much. Can we take this offline, sir? Somebody has asked. I think you can ask me offline, sir. Thank you. Thank you, sir.